Excellent. So, okay, messing around. Welcome back to the Private Equity Podcast, interviewing the leading private equity executives on unlocking their secrets to success. Joining us today is Matt Ranter, Head of Private Equity at Nimble Gravity. Welcome and thank you for sharing your insights. I've just had Head of Private Equity, haven't I?
You did, yeah.
Cancel that, Kian. We'll do that. We'll start that again. Welcome back to the Raw Selection Private Equity Podcast, interviewing the leading private equity executives on unlocking their secrets to success. Joining us today is Matt Ranter, Head of Practice at Nimble Gravity. Welcome and thank you for sharing your insights with us today.
Thanks, Alex. It's a pleasure to be here. Glad to be a part of the show.
Great. Well, as is customary, Matt, if you can give us a 60 to 90 second breakdown of you, please.
Yeah, absolutely. So as you mentioned, I'm head of practice at Nimble Gravity for our e-commerce and digital transformation practices, as well as strategy. And that role has found me, following a path that started back in 1998, getting online for the first time and starting to be part of the e-commerce world. And I've done everything from B2C consumer electronics and appliance sales online to doing franchisee intra-web sites for telecommunications providers, and then diving into the B2B world and helping to run and manage electronic components marketplaces that had 2.5 million SKUs sold into 156 countries around the world, and did everything. And then even beyond that, I moved into mobile for a couple of years and checked out the mobile ad tech space and mobile marketing. So I've got a really broad understanding of the digital platforms and digital ecosystem that exists out there in the world today. So that's me.
Interesting. So what made you move from being in operator mode, as you kind of explained there, to kind of working within a consulting business, obviously supporting private equity firms and their portfolio companies?
Yeah, it was an interesting moment in time for me where I was actually lined up to take a job being an operator and running a website for a company, and mentioned it to a former colleague of mine that was the case. And he said, well, hold on a second, maybe there's something else you'd like to do, and started describing to me the opportunity that exists in consulting for private equity. And it sounded to be a great fit for me personally. And I jumped into the opportunity. Unfortunately, had to tell a company, goodbye before I even started, which wasn't the best situation that I've ever found myself in. But did that, dove headfirst into consulting about a year ago now, a little bit more than, and have just loved every minute of it.
Excellent. So, what is one mistake that you see either private equity firms or portfolio companies making, and what actions would you suggest for them to correct them?
Gosh, that's an interesting question. I think one of the things that I would say is expediency, just moving as fast as possible, right? And in your decision making, in your execution, you have to derive value out of the investment that you're making, out of the growth of a business that you're trying to drive as quickly as possible, right? And I kind of constantly go back to this saying in my head that good is better than great, right? Like, you don't want to go after perfectionism. You want to go after a great solution, a good solution, get it out there, execute on it, and go quickly. And that can apply to whether that's a development idea from software engineering to executing in a different way online, digitally, to instantiating a new relationship in marketing, whatever it might be. You've got to make fast decisions.
Sounds pretty good. So, how can due diligence? Frame this actually, Ken. Rewrite this. So, I know that obviously with the business there, it's heavy on data and utilizing that. So, how would you recommend that private equity firms do the same and utilize data to stay ahead and also identify trends?
Yeah. So there's tons of data sets that exist out there, right? So You can pick up clickstream data for what's happening from users across the industry inside of e-commerce, and understand where people are purchasing products, what they're paying, if they have changed from not buying something to buying something all of a sudden that exists within a certain industry. You can run scrapers that go out and find competitors' data and pricing. You can do geospatial data and understand where a variety of geospatial activities are, or landmarks, or housing, any number of things exist, and drive that data down into actionable insights for an organization, right? So you can use public registration data, car registration data. You could utilize. You can use housing starts. You can use information from fuel price and all kinds of things to drive modeling that will predict future purchasing behavior for companies, and help that to make a impact for a new investment that you're making. Yeah.
Sounds interesting. Is there anything you'd recommend tools-wise to utilize that kind of work? Because I'd probably be interested myself, to be fair.
Yeah. So there's everything, right? So you can go to simple competitive intelligence tools, right, that exist out there, something like a similar web that exists for e-commerce competitive intelligence, right? You can utilize then data sets that exist across so many different fronts, and they may have specialized data sets. You can work with partners who specialize in this area, and really what you're going to probably ultimately need are data scientists. You're going to need people that can crunch those large data sets, make models and comparisons against the data from a company that's perhaps a target in a diligence process, or that's a portco for a private equity firm, and then help them identify those opportunities utilizing those alternative data sets to drive value into the organization.
Interesting. Definitely be looking at that into certainly for ourselves and our research and due diligence. You mentioned obviously due diligence there, and how can the due diligence finding process and information that comes from that support the drive from your recommendation through value creation work?
Yeah. So I think the two are, intrinsically tied together, right? And what you're doing in that diligence process is often identifying opportunities for growth for an acquisition target. And in that process, you're finding things that are perhaps challenges for the current organization. Let's talk about specifically for e-commerce, right? So you might find that page speed is a challenge. You might find that their backlink profile from an SEO perspective is a challenge, and that it's toxic and actually bringing their rankings down from an SEO perspective. There's any number of things that you might find like that throughout the process, that then you can turn around and say, okay, you have toxic backlinks. Here's how you go and remove those. Here's how it should impact your rankings. And here's what improved rankings and SEO could mean from a revenue impact standpoint. Same thing from something like a page speed study, right? Or you can go out and you can find out what competitors of that business are doing for targeting keywords online, whether that be paid keywords or organic keywords. And then you can help model content strategies and advertising strategies that are going to take advantage of either areas where your competition is finding success, but your target company is not, or your portco is not, or areas that are essentially blue ocean, right? That nobody's bidding on, but that are having queries made for them by people on the internet, and you can go out and capitalize on that traffic. So there's tons of opportunities across a digital diligence process like that exist.
Interesting. Fire a little bit into this, because I'm literally about to start a search for it within an e-commerce business. So I'm thinking what they would be asking in this phrase as a private equity firm. Looking at the e-commerce landscape, obviously incredibly competitive. If we look at, Amazon's regarded as an e-commerce business, to which it is, of course, but it's mainly a marketplace organization, such as an eBay type scenario, but not seen in the same guise as its new product. So How does a business that's utilizing said platform, you mentioned a little bit about SEO there, keywording, etc. Is that the main play for a business that's obviously let's say a consumer distribution organization selling via e-commerce, sourcing products from probably Asia and Latin Southern America? What's the key differences there between what a good business would be and a bad business? There's obviously product quality, but in a distribution world where they're not manufacturing, what advice would you give them to kind of stand out against other competitors, which in essence, who can be in front of the customer, I suppose, if I'm right in saying that?
Yeah, sure. There's a ton to unpack in that question, right? And how to best be competitive online. And I think we could dive down a rabbit hole and talk about the differences between D2C or people that have, actual retail stores as well as an e-commerce presence, or perhaps they're a SaaS business, right? There's a variety of different things that you might do in each individual instance, but I think you got to go back to some of the basics to start with, right? So I think you have to maximize the performance of your site. You need to execute well on things that are basics, email, right? You have to go out and figure out both a paid search and an SEO strategy, because one of those is going to be a much faster play. Paid search is going to drive revenue quickly for you. SEO is going to drive revenue long term, and it's not going to have that advertising expense. Both will, of course, have man-hour operational expenses to executing them, but you need to focus on both of those. And then I think you start to get into some of those areas where, okay, now we can start talking about what are some differentiators that can happen. So I'll tell you one area that people are not paying enough attention to, and I'll call it, for the purpose of the conversation, up and coming social media platforms. They are far from actually being up and coming, but they're up and coming in the sense of all advertisers adopting them and believing that they're the place to be. So I'll give you a great example of one of those being TikTok, right? TikTok has actually got the absolute best algorithm out there of any social media platform on delivering content to its users that has ever existed. There are more people watching hours of video footage on TikTok than anywhere else in history. That algorithm that is serving up data and then presenting videos to people based upon what they like, what they watched, what they searched, and what they're interested in is so finely tuned that it's killing Facebook, it's killing Instagram, everything out there, right? And so no matter who the user is and what they're searching for, they're going to find something highly relevant to them on that platform. Well, here's the catch. The overwhelming majority of businesses are probably going to say, oh, my customers aren't there. Well, guess what? I am here to inform you. Yeah, they definitely are there. They might not be there in the same droves as the 24-year-olds are there, but there are absolutely people in the 45 to 55, 55 to 65 age groups that are on TikTok, and they're going to be consuming your content. And the further we go down the road, the more and more that's going to become the case. And it'll become the case on other platforms too, WhatsApp, Reddit, et cetera. And so this is an area that a business could go and take an opportunity now and dive into and capture traffic that their competition isn't capturing, and also not have high competition in pricing, in viewership, in overwhelming that audience with other competition based ads and data. They're going to be on their own there right now. So I would definitely dive into that if I were somebody looking to differentiate.
That's interesting. And thinking about those type of, and thinking like a private equity investor at this point, I think we're all in general consensus that we're either in a recession or we're walking into one, depending on your perception of recession. And let's not dive into that, but it's if I'm a private equity investor, I'm looking at businesses like this. If we think about consumer spend, if we look at companies like Amazon and Walmart, what we're starting to see now is high inventory, high stock level, and therefore, sell-offs will be happening as we've had supply chain depletion and not been able to get it. And now we've got too much probably supply chain, hence obviously a recession type environment. if you're a private equity investor, we're still looking, if you're a specialist in e-commerce, or you deal in, as you call it, D2C, B2C type businesses, what are some of the areas that would be potential red flags that typically you would see as e-commerce businesses that struggle, that have maybe rode the wave post-COVID and therefore have seen incredible revenue growth, incredible EBITDA growth? What would you say are some of those potential red flags of those businesses, which as an investor I'd be thinking, okay, I want to be delving into this in more detail because I don't want to invest in a post-COVID great business?
Yeah, wow. Another really broad, deep question there with a lot to unpack. I think first and foremost, in doing some recent research around this topic, right? Like you're seeing a stark difference that is probably pretty obvious to most people, right? Of your must-haves, your essentials are still succeeding. People are still driving dollars into those businesses. Your items that are wants, needs, desires that you can postpone the purchase of, those are getting set aside, and spending is dropping in those areas, has already dropped significantly, right? So I think first and foremost, you're going to want to look at the product mix of an organization and what is it that they're going to market with, right? Are they going to continue to have, substantial and steady revenue streams just based upon the products that they're offering or the service that they're offering and its essentialism to an individual? And then I think what you want to also be careful for is watching out for the pricing across an entire industry, right? So typically what you'll see in an instance like this, where folks are, in those categories that aren't must-haves, they start to do price promotions, right? They start to do discounting. They start to, offer free shipping. They start to, at a higher level, maybe a faster level, right? They're trying to steal whatever business is out there, even though that entire universe of consumers has dropped for that particular category. They're trying to maintain their share. So they're doing whatever they can to do that. And typically that hits into, pricing, promotional efforts. That's going to be a race to the bottom, right? You're going to erode margin. You're going to perhaps gain more customers, but what you're going to find at the end of the day is you probably have increased your operational expenses by shipping things out more, by driving more packaging. Your margins have dropped because you're asking less from a pricing perspective, and you've kind of got this double-sided squeeze happening. And then when you come out of that, you can't get away from it. You can't all of a sudden go, okay, great, everything's good again. Prices are 20% more, right? Because the consumer isn't going to buy that. They're not going to allow you to do that. And more likely than not, you're going to have competitors out there that are still willing to continue pricing at that level once they've all raced to the bottom. And then businesses start to decline, and the attrition occurs in the industry, and consolidation happens. And that's a tricky place to be. It'd be something I would want to try to avoid for sure. So.
Okay, interesting. And your background's been heavy kind of marketing, and it had a huge marketing bias. Looking at that, it's I wouldn't say it's the new area of any business, but certainly it's taking more and more traction as we see more people pushing that on a international or more prominent scale. What's one of the areas that, if you were to say every single e-commerce business should be adopting, or that there's the mistake that they're making, that, look, you need to look deeper into this area, what would be one of those areas that you'd say, if you're running an e-commerce business right now, take a look at this, take a look at that? What would that be?
Yeah, that's a great thing. So content right now. And here's why. It's a multi-pronged answer. So a lot of instances you'll see people creating content, but they bury it on their site. It becomes 5 clicks, 7 clicks, 10 clicks deep to get to it. And a search engine spider will give up on trying to find that content. One, you have to have a content strategy that surfaces your content to a very quick to find level on your website. Secondarily, around your content, you have to have some key pillars of content that you're going after. What are the key things that we as a business want to be known for, right? We want to be known for social media marketing? We want to be known for paid search marketing? We want to be known for bespoke bicycles? What is it, right? And then around those things, you have to build, spokes and hubs and wheels of content that are related to that and linked back. Now, the third part of this around content is everybody needs to stop trying to write content to fool search engines. And they need to write content that is natural in the way that it approaches a conversation, and that it focuses really on the way people would have a conversation or interact. And here's two reasons for that. One of them is Google has just gone and made a whole bunch of updates to their algorithm, and they're essentially now trying to weed out those people that are doing things like keyword packing into articles and into content. And they're trying to get away from things that are unnatural searches, but people have learned that they need to do on Google in order to get the results that they want when they're searching. So a simple example of that would be you'd go to Google and you'd type in best pizza near me, right? You would never talk to somebody like that. I would never go and walk up to you, Alex, and go best pizza near me, right? Like you would have an actual conversation and you would say, hey, Alex, where's the best pizza place that's within, a 5-minute walk from us right now, right? And that's actually also how you talk to your smart devices at home, your Google Homes, your Alexas, these kinds of things. And they rely on your content online to find answers in order to provide that information to a user who's talking to one of those devices. So that's another critical reason that people need to focus on that. So I think it's all about content, and there's so many facets around it that people have to focus on, but that's the one thing that I think everybody needs to go after in totality and go deep on.
And clearly an advocate of that, otherwise, the private equity podcast wouldn't exist as one area and one line of our content strategy for brand awareness, of course. But there's an element. Podcast is still a fairly new area of marketing and not as well adapted. I was looking at numbers actually, and I think if you have like 40 downloads on a podcast in the first 7 days, you're in the top, no, maybe not 40, maybe 90 or something. You're in the top 50% of podcast downloads, which is mad really, because it's not very good numbers in simplicity of it. But I suppose if you compared it to blogs, that might be a similar basis, unless I know you've been featured in Forbes and things. I've heard Forbes got better traction rate in the first 7 days than 90 viewers of their blogs. But if we think about that overkill of content, and this might be too much of a big question, but how does a firm begin to look at where do we start, or how do we prevent ourselves being the generic overkill of content and the blogs that no one's ever read online, and the content? Is it just down to simple as creating great content? And I suppose, is that an easy answer to that? Or how does somebody avoid the, or you're just another content production machine that nobody's interested in?
Yeah. Wow. I mean, another big question there. Creating great content, right? That's a challenge in and of itself, to consistently put out good content. I think that there's a couple things I would focus on, right? Like, first, you want to write content that your audience is actually interested in and actually reading. Don't create content just to create content. And you should do this through testing and looking at the analytics that you have on whatever the platform is, right? Like, what are your top 10 most downloaded podcasts that you've ever done? What were the topics? Should you talk about those topics more? What are the top blogs that you've ever written, right? And should you focus on writing more of that content, or should you focus on updating that content and making that content fresh and relevant to the here and now? If you wrote it a year ago or a year and a half ago or 2 years ago, in the digital world, things are happening so quickly that I bet you could go back and change that and make it highly relevant and continue to reshare it over and over again. There are then, on top of all of that, right, there are intelligence tools around content, right? So you can go into some competitive intelligence tools out there and say, hey, I want to write about a topic. And you can put the topic in, and then it'll feed back to you information about, well, here's all the other people that are writing about this topic. Here's the tangential topics that they're writing about that are related to that. Here's the traffic that they're getting, right? And you can start to find these areas where, okay, well, maybe I don't actually want to write about due diligence in private equity because everybody's writing about that. Maybe I want to write about value creation because nobody's writing about that. And you find these pockets then where it's going to be easy for you to rank, and whatever rank means, whether that's you're getting lots of eyeballs and viewership on your website, you're getting good downloads on your podcast, you're getting good views on your video. You're going to be able to find those opportunities that are blue ocean opportunities to go after around a topic that you want to talk about. And then you can use a variety of different tools to help drive the value inside that content, right? Am I writing something? So am I using an SEO friendliness tool to understand how my content is structured? Am I helping, to find the best podcast guests that I can go after, right? Am I utilizing some kind of agency, or am I just randomly pinging people on LinkedIn hoping for the best, right? Like there's all kinds of tools that exist out there for people to go and execute on those things. And I think that if you don't use all of them in conjunction together, that one of your competitors is going to, and they're going to beat you to the punch. So.
Okay, that's some pretty hefty questions there, so thank you very much. I appreciate it.
Yeah.
We do a whole podcast on even just a linear element of those, so thank you very much for that. So bring it back to clean private equity. What do you love about the private equity industry, and equally, what do you dislike about it?
Yeah. So what I love about it is frankly the diversity. And I've been fortunate to be able to work with a lot of different companies, right? Doing a lot of different things, very different businesses. And I find that fascinating and very interesting, where, somebody else might be like, hey, I just want to focus on, one industry, one area. I've been lucky enough to get to work across a lot of them, which I find fantastic. And what do I not like? Gosh, that's a tough one. I don't see it very often, but occasionally I'll run into somebody who thinks that the digital presence of a business isn't impactful on the totality of their business in whole. And in that instance, it makes me just kind of, question what they're thinking, right? Like, why is that the case? Are you looking for just a short-term turn on a field sales organization, and you're not going to go and drive change into that business? Certainly possible, right? But it just gives me a moment of pause anytime I hear somebody say that digital doesn't matter for this particular engagement.
Yeah, I think there's a lot of belief in old school, and we've always done it this way, and that classic comment, which really does hurt businesses. But there's plenty of businesses, even private equity backed, that have struggled with the concept that I think it was Toys R Us that rejected the concept of the internet and thought that people would still like to come into store and always come in and see the toys. Which I remember being a kid and going in Toys R Us, but it certainly won't happen ever again. So we understand where that lack of awareness can certainly come through. What three attributes do you believe make a top performer, Matt?
Tenacity, never giving up, right? and then I'll say, I'll say being an autodidact, somebody who's a self-learner, a self-teacher, self-educator, that's going to go out there and find solutions to problems, that is going to, think and execute, and then somebody who has growth as a mindset, right? Like who just focuses on, if we're not growing, we're in trouble. We've always got to be changing and evolving and driving business forward, trying new things. Growth as a mindset is a huge indicator to me of a top performer.
I don't believe anybody would argue with any of those points. What are your influences, Matt? What do you read? What do you listen to? What educational resources would you recommend for others in the industry to check out?
Yeah. So I actually love kind of alternative podcasts to business podcasts, but ones that I think have deep value for listeners. And a lot of times those revolve around psychology and things like that. So I love Hidden Brain by Shankar Vedantam. I'm also a big fan of 10% Happier with Dan Harris. I think they talk about super interesting things on there. And then of course I love Masters of Scale from a podcast standpoint. I think that that's a fantastic one. I frequently use Google Alerts as well to go out and just find information and news about things. So you can set up an alert on a topic that you're interested in, and it'll start feeding you content. And that way you'll find different sources than you'll normally go to, different things that you might do, which is fantastic, right? So I'd say that those are good. And then, I've been a huge fan of the book Essentialism. Great book. If you haven't read it, it's about, essentially the practice of smartly saying no, being very picky about what you choose to say yes to. And then, some of the classics like A Good to Great or things like that.
Just made a note of essentialism. I haven't seen that, but I could certainly do with saying no a little bit more than yes at times. So I'll definitely check that out. So if anybody wants to reach out to you post this conversation, Matt, how best do they do so, please?
Yeah, I think the two easiest ways for somebody to do that would be to go to our website. It's www.nimblegravity.com. Or the alternative would be to hit me up on LinkedIn, and it's just under my name, Matt Ranta. You can find me there, and I'd be more than happy to connect with anyone.
Perfect. Thank you. Thank you very much for joining us, Matt. Really appreciate your insight, sharing all this, and me diving deep into the world of e-commerce and a bit of marketing strategy. Even there have been pretty big questions, but thank you very much for sharing everything.
Yeah, I love the conversation, Alex. Thanks so much for having me, and I appreciate the opportunity.
Excellent. And as always, thank you very much for those joining and listening. And of course, should you ever be looking for a new opportunity in private equity as an investment or back office professional, or of course, a portfolio executive, then please do reach out to us at Raw Selection as we work across Europe and North America for senior and exec appointments, all specialized in the private equity sphere. But till the next time, keep smashing it. And thank you very much for listening. That was great, Matt. Thank you very much.
Great. Yeah, thanks, Alex. It was a fun conversation.